Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, October 14, 2009. The dollar continued its slide against the euro in today's trading as stock markets continued to rally, gold hit a record high, and risk appetite was helped by favorable news from China. The euro broke above yesterday's high early in the session and set a high near 1.4950 in late New York trading as the Dow Jones Index rose above 10,000 for the first time since October of last year. The Greenback was pressured also by comments from Fed Reserve Vice Chairman Donald Kahn, in which he warned that the U.S. recovery would probably not be a V-shaped one and that interest rates would remain low for an extended period. That contrasted with some other suggestions from Fed officials that they remain ready to hike interest rates if needed. Eurozone industrial production rose for the fourth straight month as it climbed 0.9% in August, and July's figure was revised upward from negative 0.3% to show an increase of 0.2%. The rise was led by consumer durable goods, adding to signs the euro area economy is recovering from its recession. On the year, production was still down 15.4%, but though that was the best figure in 7 months. In the UK, the number of people seeking unemployment benefits rose by 20,800 in September, a figure that was smaller than the one in August and smaller than the forecast. The claimant count unemployment rate, meanwhile, remained at 5% during the period, while the ILO unemployment rate, a measure of the 3 months through August, remained at 7.9%. In comparison, the US rate is at 9.8%, the Eurozone rate is at 9.6%, and is 5.5% in Japan. The pound-dollar pair rose today, though price action was subdued compared to yesterday's session. Today's rally stalled at 1.6020, which was a 76.4% retracement of the recent down move. This pair has been trading in a sideways range for most of the past 3 weeks, with support at 1.57 and resistance at 1.61. In the U.S., retail sales fell 1.5% in September, a figure that was heavily skewed by a drop in auto sales as a result of the government's Cash for Clunkers program expiring the previous month. The 1.5% decline was smaller than expected, however, as other retail sectors performed better than expected. Taking autos out of the equation, sales were up 0.5%. Therefore, despite flat incomes, high unemployment, and consumers paying down their credit, the report shows that households may still play a greater role in the emerging economic recovery than first expected. U.S. business inventories continued to be run down in August, with stockpiles decreasing 1.5% compared to the previous month. That figure was a bigger drop than forecast and can help lead to companies placing more orders after drawing down stockpiles at a record pace in the first half of the year. The dollar-yen pair fell in favor of the yen in the Asian session as China showed that its exports fell less than expected, which helped to boost the risk appetite, and the Bank of Japan said the economy has started to pick up and that it would end its credit easing programs by the end of the year. Following a test of the 89 level, which was a 61.8% retracement of the most recent upswing, the dollar managed to pare some of its initial losses. For the time being, the pair remains in a sideways range between 88 and 90.50. Commodity currencies inched higher against the U.S. dollar as oil prices hit a 52-week high, and as we mentioned, gold tested a new record high. The U.S. dollar-Canadian dollar pair fell to a low of 1.0250 in today's trading. Higher stocks propelled by better earnings from Intel and J.P. Morgan Chase helped to increase risk appetite. Tonight, New Zealand will post data on manufacturing activity and consumer prices, while overnight the Eurozone releases its final version for September's consumer price. Tomorrow, the U.S. will post its consumer prices, figures on weekly jobless claims, and 2 regional manufacturing indexes, the New York and Philly Fed indexes. And that'll wrap up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.